Both the Wall Street Journal and Fox Business News are reporting that there is an unlikelihood of Facebook CEO Mark Zuckerberg attending the social media site's Roadshow in New York. Our next guest is an investor relations company, and he says this troubles him and also should trouble any and every institutional investor considering an investment in Facebook. We're joined now by Jeff Corbin. He's Chief Investment Officer of KCSA Strategic Communications with his questions for Zuckerberg. We'll get to those in just a moment. Nice to see you, Jeff.
Nice to see you. Thanks for having me.
Okay, so we're told that Zuckerberg will likely not show up at these road shows. He may show up once or twice. So why is this a concern for you?
Well, I've been working with companies undergoing IPOs for well over a decade now, and quite honestly, this is the first time I've ever heard of the CEO of a company not showing up to these sort of events, especially where there's billions and billions of dollars that are about to be invested into a company.
Does it smack of arrogance, do you think?
A bit. But I think, it's not I don't think it's not characteristic of what we've seen over the past year with Mr. Zuckerberg. In fact, I think it was only 3 months ago or so it was reported that he didn't show up to an analyst meeting in his very own offices in California.
All right, well, these guys are usually different birds, we know that. All right, so you've got 5 questions that you would like to pose to Zuckerberg about his company. And number 1 is, what's your plan to diversify the company's revenue? Why is that the first question?
Well, I think, when investing in a company, you have the company's numbers. We know that they are presently running at a rate of approximately $4 billion a year in revenue. We know what their net income is. We know that they're on the verge of 1 billion users. The numbers don't lie. They speak for themselves. The question is, what else is going on within this company? How is this company going to grow? And from our perspective as investor relations consultants, we want to know the growth strategy and plan and have an understanding of how the company itself to the next level. Right now, that has not been explained, particularly in the company's S-1 filing.
All right, we're getting estimates now that Facebook will value itself around $75 billion, the offer price between $28 and $35 a share. But at those levels, how does their advertising revenue multiple compare to Google, for example?
So Google is trading at a 5.5 times advertising revenue valuation right now. So if you were to look at Facebook's revenue, right now it's 85% advertising, 15% in their payments business. So if you do the math, we're talking about probably somewhere close to a $20 billion valuation, certainly nowhere close to a $75 billion valuation.
And what about Zynga? This is another question you have. They get a big chunk of their revenue from Zynga, about, about 11 or 12%. What's your question in that area?
Correct. So Zynga, as I said before, there's 2 components to Facebook's business right now. There's the advertising model and then the payments model, 15% of which is in payments, of which Zynga represents 60%-ish, close to 2/3 of that business. So what happens if Zynga, being a public company now on its own with the resources and wherewithal, what happens if they come up with their own solution? How dependent are they really on Facebook? And what happens to Facebook if all of a sudden Zynga disappears? It's not to say that that's going to happen anytime soon, but certainly it's something that investors should be thinking about and aware of, and ask that question of the company, because without Zynga, without the payments business, then the company is 100% dependent on advertising.
Jeff, the 5th question you'd like to ask Mr. Zuckerberg is the fact that they're going to be a controlled company. They've chosen to be a controlled company. What does that mean exactly, and why is that a problem? Why is that a red flag?
It's totally, I wouldn't say it's a red flag. It's something that is regulated. It's something that's accepted. What it means is that Mr. Zuckerberg is going to have a majority voting power control over Facebook. So the company is not required under the NASDAQ guidelines to have independent directors. It's not required to have a nominating committee. It's not required to have a compensation committee. All those things that were brought into concern with the passage of Sarbanes-Oxley when we were looking at greater transparency and oversight of companies and their corporate governance. From an investor perspective, they have to ask the question, I'm about to give up a significant amount of money in your company. what's to stop you from just doing whatever you want to do? The news reported that Instagram was purchased for $1 billion in a week's time. I'm sure there was more involved behind the scenes, but certainly that's something that, as an investor, I would be concerned about.
That's right. It's reported that Zuckerberg negotiated directly with the owner of Instagram and pretty well got rid of all the bankers and lawyers for the most part, and then sort of brought them in at the end and didn't even tell, I think, the CFO. Just lastly here, Jeff, all of these things that you're mentioning about Facebook, do they draw into question the character of the company and the attitude as well, the attitude of management?
So one of the things that I've been talking about, that I've been blogging about, and that I believe is that there's a huge opportunity with Facebook. I don't want anyone who's listening to me to think that I'm all doom and gloom with regard to Facebook. They've done a tremendous job. They've created something that no one else could potentially create. The issue is it's not just a concept anymore. It's not just a philosophy or a vision of Mr. Zuckerberg. It's now also a business, right. And it's the business that's going to drive the valuation in the stock price.
Well, thanks for your time and giving us that perspective on Facebook, Jeff.
Thanks for having me, Mark.
That's Jeff Corbin, Chief Investment Officer at KCSA Strategic Communications.